Hi folks, Steve Nixon here at Logic FX Trading, and welcome to our building block series where we're learning Elliott wave theory as a prelude to the competent trader training and mentoring programs. Now, in the last video we started to examine Elliott's guidelines and we had a look at extensions, alternation and wave equality. Now we're going to look at Elliott's guidelines for the depth of correction and channeling, both of which help us determine the probable boundaries or extremities of a structure. We'll start by looking at what Elliott called bear market limitations or depth of correction, and then we'll look at his guidelines for drawing channels. So here we have our generic impulse once again, with our 1, 2, 3, 4, 5 coming up. And the big question is this: how deep should our corrections come? These two corrections. And if we add in and make it a complete cycle, how deep would our ABC correction ordinarily come without a change of trend? This is just talking about one cycle, guys. So how deep should these ordinarily come? How deep should that come? How deep should 2 come? So Elliott gave us guidelines for these, but let's start with wave 4 here. So how deep can this come? Well, ordinarily, as you may well know, as you should know if you've watched the other videos, we'll have, this is our 3 wave, but it will be made up of 1, 2, 3, 4, 5 waves in itself, 5 subwaves. And the tendency is, and that's why it's a guideline and not a rule, the tendency is for this correction, and remember this correction will be some sort of ABC, maybe it might be a diagonal, might be a flat, could be a triangle. The tendency is for the maximum retracement, in this case C, to fall within the span of wave 4 of a lesser degree. So if we draw this in like this, might make it a bit clearer. So with the wave 1 coming up, wave 2, wave 3, wave 4, wave 5, just make sure we haven't drawn a diagonal. There we have it. And remember, at this point, this wave is in development. It hasn't happened yet. So the maximum retracement of this tends to fall within this area here, within between 3 and 4, that price area. So it doesn't come to there, it comes down into there, and the maximum would be the termination of 4. So then if we go on to the next situation where we have a correction after wave 5, yet again it's normal for the maximum retracement to fall within the same area. Now there are lots of situations where it goes deeper, but we're saying it's a guideline that in a normal cycle this is our maximum retracement into the area of 4. So for wave 2, the situation is slightly different. In wave 1, it often comes down into the area between 1 and 2. So wave 2, and if we draw in, there's our area of wave 1. There's our area. Let's draw this in. So in wave 1, we often get a deeper correction that will come right down into this area here and can often go right down and give us what we know as a double bottom. In other words, it comes right down to here. Because remember, these waves are of 1 degree less than our big impulse going up. And wave 1 will completely retrace itself almost half the amount of times that we see what we consider to be wave 1 about to take off. Half the times, guys. Which is the reason why I rarely ever try and trade wave 1. You'll see me doing this, guys. When we get a breakout, an impulse going up, you'll see me doing this. And saying when we get a break of that line, then it's time to look. Because if we get a break of that line, we're not going to get this situation here. Or it's going to be a new impulse that comes up like that. 50% of the time these come back down, guys. So in normal circumstances, let's say it didn't come that deep. Let's say this just turned into a flat correction where it comes down into the 4. Well, in this situation we'd be okay, wouldn't we? Because we'd get the break of our trend line, and then we would get another pullback, and then from there we would have the start of our wave 3 going up. Yet again, this is guidelines, guys, and I'm getting off topic here because we're supposed to be talking about guidelines rather than actual analysis and trading rules. Let's now have a look at channeling, which Elliott used to determine normal wave targets and provide clues to the possible development of trends. We'll start by using this complete impulse to learn Elliott's guidelines for channeling, and then we'll take a look at a more irregular situation. So what Elliott said was initially we require 3 points, and generally speaking the 3 points are 0, the top of wave 1, and the bottom of wave 2, because this is 1, 2, 3, 4, 5. So we need this set up to start our channeling process. And once we've got that situation, we start by connecting 0, where the impulse starts, with the end of wave 2. And then we take our parallel channel and we connect it up to the top of wave 1, and that's our initial channel. Now and remember, when we first do this, we've only got our 2 waves. So as wave 3 develops, we see here that it breaks out of our channel. So as it says here, channeling involves several revisions, so we'll need to do a revision. So we started there with 0, 2, and we've used our parallel tool. So our first revision is to use 1 and 3. So if we take this out, and then we join the end of 1 to the end of 3, and pull it back to 2, we have our revised channel. And we can take that line out and put it up there and join the end of 1 to the end of 3. Okay, so I've just put these numbers in so we know where we are. So we've joined the top of 1 to the top of 3, and we've dropped our parallel channel tool down, and we've ended up with this. So now, from the end of 3, we have a very good target for 4. The chances are when 4 comes down into this region, and this is what we call, well, they're called pivot points, or as I like to call them, decision points. As 4 comes down, as it approaches our line that we've drawn parallel to 1 and 3, we start to look for the start of the next trend up. Right? As we've said many times before, it isn't paint by numbers. It can come beyond it. It might not exactly reach it, but it gives us a zone where we start to look for our next wave up. And then price pushes on up, and generally speaking it'll end terminate somewhere in the region of where the end of 5 connects with the top of the channel, which gives us another pivot point. And then from there we may be looking for a trade back down A if we want to trade counter trend. Now remember guys, this applies on all time scales. So this could be a 15-minute chart, which I wouldn't recommend trading. It could be a 240-minute chart, or it could be a daily chart. Now if it's a daily chart, these moves down and these moves up can be significant trading opportunities, because this could be 300, 400, 500 pips, could be 1,000 pips. So if you're working on the right time scale, these are great opportunities to look for nice trades. And remember, as always, this works in a bear trend as well. So let's now have a look at a more irregular situation where 3 is very, very strong and comes up almost in a vertical direction. So how do we go about channeling this? Well, obviously we start, because remember this is in development, we start by joining 1 to the bottom, we start by joining 0 to the bottom of 2, and we put our parallel lines in to the top of 1, and that's our initial channel. But then, as we said, if 3 comes up in a very, very strong manner, then clearly our channel isn't correct, so we have to do our revision. Now in this situation, we reuse this one. If we join 1 to 3, and then again bring our channel tool in, we're looking at a very sharp, channel, which may or may not be correct. But as 4 develops, remember this becomes our pivot point, this becomes our decision point, and 4 carries on down through it. Well, then clearly our channel isn't correct. So how do we go about giving ourselves an idea of where 5 is going to end and our new correction is going to start? What Elliot suggested we do is that we find a point on the baseline and join that. This is what he called the baseline, and we join that to the top of 1 to give us our new channel when this happens. And in this situation, I've just drawn a simple correction here that would have come after the end of the previous impulse. So now we have a situation where we've B1 and we extend it up and we put our parallel lines in. And we connect our parallel to the bottom of 2, and it gives us a better idea of what the channel is, what the trend is. And this, the whole point of this exercise is to tell you that it's okay when drawing a channel to have a point or two that's outside the channel. Remember, these are guideline tools, guys. They are not picture perfect. And in this situation, when we come back down here, there's a fair chance that we're going to get a turning point in and around this region, and that our 5 will end somewhere close to our trend line. But whether we're talking about this particular irregular channel or a normal channel, 5 can come up beyond it, and it can turn before we hit it. Remember, we're talking about pivot points or areas of decision, and it's not about coming up and exactly touching it and then this is time to sell, because it isn't necessarily. So what we may find in a situation like this, let's take this 5 out, we'll put it back down to there, and we'll put our subwaves in. So as 5 starts to come up, we may well find a situation like this, where wave 3 touches the top, or comes close to the top, and wave 4 kind of runs parallel to your trend, and then wave 5 peaks up above the top of your trend line. Now in those situations, obviously it's very important to do our internal wave count, because that will tell us whether wave 5 is complete or not. And yet again, this gives us a clue to where we're going to look for a change of direction, a decision point, where we start to look for our next move down. Alright folks, that's enough information for one day. So we'll end it there and pick up the story again in the next video, where we'll complete our look at guidelines by discussing what Elliot called the right look and also wave personality. I'm Stephen Nixon. Thank you for watching. Bye for now.